right. Welcome back to capitalcompetent.com. My name is James, and today we're going to go over episode 2 of the 10K, or excuse me, the 1K to 10K challenge. Okay, I'm going to go over some trades that I've made and also update you on the website. It is now live. Okay, let's go over to the portfolio. Let's look at it today. Oh, we're up. Awesome. Look at that. I added my $105 and I made some trades. Okay. These are the trades that I've made. You got a little sneak peek right here, but we're just going to ignore that for now. All right. First one, SPY. Okay. This is one of my favorite ticker symbols to trade. This is our backbone, right? We're following that five-prong approach, 40% to 50%. We're a little bit over, okay? That 40% to 50% is just a guideline. Sometimes you can go over, but we bought one share of SPY. Now, why do I like SPY so much? Well, it is one of the highest volume and one of the first ever ETFs. It trades the 500 biggest and best companies in the United States, and the ones that are not doing so well can be dropped, and the ones that are becoming the best companies are put together. Now, America is the strongest and freest country, okay, and we have the ginormous advantage, huge advantage of being the world's reserve currency, okay? That advantage for a country is just unbelievable. Okay, people peg their value against our dollar. All right, so our companies, we're going to have the lending power, the borrowing power that most countries do not. So we're going to experience the most growth. We have the highest standard of living and the highest competitiveness in terms of technology and all of that. So America is going to keep growing, and this is something that will never go to zero. I've had stocks go to zero. This one I can guarantee will not unless we are in a nuclear war or something. Okay, something where money doesn't matter. But as long as money matters, this is not going to go to zero. It averages 10% a year, and this is what we are all going to be competing with. Great, great stock. Highly, highly, highly recommend it. Okay. My second stock, the S&P is going to go up and it's going to go down. More likely than not, it's going to go up, but when it goes down a lot. Okay, so my second stock, right, in the portfolio the second one I bought is my safety. Okay, I got two safety. I got bonds and I got gold. Okay, bonds, it's my stability and my fixed income. Okay, right now you're kind of getting it at a great price. Now, theoretically, as the stock market goes up, this will go down. However, it's a fixed income. Okay, so you're going to get paid monthly and it is guaranteed. It's guaranteed by the full faith and credit of the United States. Like I said, we're the most powerful nation in the world. The nation rarely defaults, right? And it'll almost always pay. Okay, now this one is split up. It's an ETF, right? So we got those US government bonds, okay, 70%. We got AAA bonds, AA bonds, and this is just the credit of how good the bonds are. That's the best way to put it. So this one is almost guaranteed. This one is probably like 95% guaranteed, 90, 85, something. That's the way that I think about it. Okay, so you're gonna have a fixed income, and theoretically, if the SPY goes down, this will go up, right? So it'll keep that stability in our portfolio as well as giving us a fixed income. Now, if the government does run into trouble and they cannot pay their debts, right? They cannot give us our fixed income. They can either default or they can print more money. And 9 times out of 10, they are going to print more money, which is why I also did gold, right? Gold right here. These two are my safety positions. We said about 10%. We're looking at about 10%. Now, Investopedia pretty much sums it up. These two things is why I want to buy gold. Number one is inflation. If the government gets in trouble and it can't pay you on our bonds and deposits, right? They're not going to default. They're almost never going to default. What they're going to do is they're going to print more money, right? Gold is pinned against the dollar. If the money supply goes up and the gold stays the same, guess what price is going to rise? Of course, the gold. So it is a hedge against inflation, but it also is diversification with my safety. Okay, because I don't want to be just bonds. I want to have a little bit of gold as well, just as a safety. Okay, so we got our backbone with the SPY, we got our safety for price stability, fixed income, and inflation hedge. We're looking really, really good. So we got our backbone there, and now we're going to get into the fun stuff, which is my personal picks. My personal picks. Okay, first one, Ford, right here. Ford is, I think, is at a very, very attractive price. I got it at 9.62 a share for 10 shares, and it is almost at its 52-week low. Okay. Ford is one of the strongest automotive brands in the United States. They are worldwide. They're in Europe. They've got Lincoln underneath them, and they are just one of the strongest brands anywhere. I mean, you look down the road, you see Mustangs, you see Broncos, I know you see F-150s. They also are heavily in the work industry. So for construction, they buy F-350s, right? They are one of the biggest truck brands out there. Okay. Now they do have some risks, right? They're investing in EV, they're trying to compete in that market. But I think this one, when you're looking at price and risk, the price is way more attractive than the risk. You always want to pin those two against each other. How much are you paying? How much are you risking? Okay. I also got the Morningstar report here. They're saying $19. I don't think so. I think it's a $15 stock. 19. It'd be great if it went to 19. That's a double, a 2x of our money. Um, but if you look at this, Ford's turnaround will take lots of time due to recent projects, but so far the international business is getting better. That's awesome. Ford is focusing its investments where it gets its best return, which is why mostly existing North American car segments and production in South America is the right move, in our opinion. Completely agree with that. Also, they have their software and data services. I think that is just going to be a huge thing. Down here, it is cyclical and it is up to macro events, which is why we only have about 8% of our portfolio. But I think this one is a fantastic personal pick. Also, okay, this is theory, right? This is not guaranteed, but in August, right, we had something that's called a gap down. Okay, typically on bad news, you will see a stock gap down. Okay, now when I was younger, I used to really believe in technical analysis. I don't as much anymore. I believe in value and what a company can bring. However, I have noticed that whenever a stock gaps down, about 7 out of 10 times, it will fill that gap. It will jump right back up, and it's typically on good news. So something around here was bad news, and now it's trading at this level. Okay. If Ford gets some good news, any good news, it's like gunpowder that's just going to pop it right back up. Okay. So I'm thinking it's going to hit $13 this year. I'm thinking it's a $15 stock. Morningstar is saying 19. So I think this one is a winner right here. Okay. My next personal pick, Pepsi, right? We look over here, we got one share of Pepsi, right? I think this one is one of the strongest companies. Okay, now they do have some downsides, right? And they do have competition with Coca-Cola, but when you look at the beverages that they provide and the snacks that they provide, right? They have so many brands that you may not even know they own. They own Pepsi, obviously, but they also own Tropicana, Doritos, Lay's, Quaker, Mountain Dew, Gatorade, Tostitos, Cheetos, and that's just a couple of the hundred they have. And I guarantee you that you have eaten one of these in the past year or drank one of these brands in that past year. And if you haven't, I can almost 100% guarantee that you know someone who has. Okay, this is a strong brand. Okay, they got some debt down here. I see this down here, but their free cash flow is 12. I'm thinking maybe 8 years if they could pay that off if they need to. They don't. They have brand power, which I truly believe in. Their revenue is around 90 billion, and I think right now it's at its 52-week low. Okay, I'm thinking over all my research, it should be a $170 stock. Okay, I'll keep diving into it. I don't know why it's so low today, or excuse me, so low right now, but we will continue to look into that, and we have about 13% of our money in this one. Okay, last one, Intel. This is my risky one. Okay, I only have one share because this is what I like to call a tracker share. Okay, I'm looking to buy Intel, but not at this price. I want to buy Intel around or under $17. Okay, so I bought one share of Intel as a tracker share. I can easily access its information. I can easily see how much it's gone up, it's gone down. Okay, I'm looking to buy this thing at $17. Now, why am I doing that? Well, Intel is one of the largest chip makers, right? AI is coming out, technology is improving, chips are almost in everything, but they have not been well run the past couple years, almost a decade. Okay, AMD has come out of nowhere and stolen market share from them. You got Taiwan Semiconductor. They are investing heavily into their physical capital and plants to compete with Taiwan Semiconductor. Now, this investment is going to take a lot of time. It's going to take a lot of money. And even at the end of it, they still might not compete with Taiwan. Okay. But on the upside, they are still the biggest chip maker. And also, Windows was created with Intel chips in mind. So they do have that one competitive advantage that will help them. We'll just have to wait and see. If it hits $17, I think that it will be worth the squeeze because if everything works out perfectly, I can see this stock getting to $40. Okay, they've had some huge downs. It's been beaten up. I think it's still going to go down a little bit further. I mean, you got Apple creates their own chips now. They don't really have that competitive advantage other than being the biggest and the brand name. So they still have that. It's going to be risky, and this is why I have my one tracker share. Its 52-week low is 18.51. I want that to hit 17 before I start really buying it. Now, we have cash, right? We're about 12% cash right now, which is going to jump up when I add the next $105. Fidelity is super cool because it will actually pay me. So it'll give me a pretty good interest rate of 2%, which is great. Pretty much how the portfolio is going to go is SPY will always be here, bond and gold will always be there. These three are on the chopping block. They are competing with this big one up here, and we will see how we go from there. Today was a really good day already. I think there was news out that drove all of the prices up, so that's pretty convenient for me. Yeah, so what I'm going to do is I'm going to get this update out, and I'll put $105, and I'll let you know of my moves next week. Okay? Now, before I end the video, let's go back over website. It's up and running. Okay? Come here if you ever want any resources. Okay? This is the 1K to 10K challenge. You click on this, you got my little article here along with the video, all for you. I also added a resources page. Okay? These are 3 books that I have read. I'm currently reading this one. I've read this one. I've read this one. These 2 are amazing. These 2 go very well together. I'm rereading this one, but these are 3 books that I have read and they have provided me with immense value, and I highly recommend reading it if you're serious about becoming the best version of yourself, making a bunch of money, and really just taking on and conquering life. Okay? Well, that's all for today. If you have any questions, please leave them in the comments below. Visit the website, let me know, and I will see you guys next week.